Hi there guys, this is Jazz aka Trend Trader for you. So in this special video I'm gonna talk about how to scan for stocks based on your criteria, not based on anybody else criteria. If you want to look for stocks that are under $5 or that are over $500, you can by simply putting these values into the free website that I'm gonna show you right now. So basically what you're doing with this scan is you're looking for either long opportunities or shorting opportunities. So what I did before I got started here was I kind of listed the bull daily scan. So in here we're going to be looking for long opportunities and also a bear daily scan in here where you're going to be looking for shorting opportunities, and these are more likely the swing types of trades where you can hold it for a day to a couple weeks or something. You can use the same criteria in a smaller time frame, let's just say day trading time frame, hourly, but you will just have to find a platform where you can input those parameters in there, because what I'm showing you is finviz.com. Let me actually go over there. So this is what I'm showing you, finviz.com. They have a built-in scanner where you can choose all those parameters in there. So you're gonna log into finviz.com, you're gonna click on screener. Okay, once you click on the screener, it's gonna take you to the descriptive, fundamental, technical. So just click all. Once you click all, it's going to show you a bunch of these parameters that you can search your stocks. Okay, so before we start this, let me just look at this chart real quick. SPY. Okay, first of all, before you get in, scanning for opportunity, you need to know exactly how you can search for those, right? So again, this video is more likely intermediate, so you should have some knowledge of reading the charts, looking at what the SMAs are, 20, 50 to 100 SMA. You need to know a little bit about the news, the volume, etc., etc. And so this is where you'll begin as part of your kind of like scanning for the stocks and becoming an intermediate to advanced trader. So knowing that I should have that in mind, that most of you are watching this video, you should know what a 200-day SMA is for, 50, and what a 20 SMA is for. So basically, I'll just go a little bit real quick. So 200-day SMA is this one here, red one, right? So 200-day SMA is mostly looked up by the big institutions, meaning that your big term traders, okay, who are holding for longest periods of time, for maybe months to years, they're looking at the 200-day SMA and they're thinking, okay, if the prices are above 200-day SMA, we're keep going long. Okay, if they're below that, we are either out of your positions or possibility of even going short. As you could see on the SPY, it was up for a while above here, right? When it went up, retested, came down, retested, came down. Now it's acting as a resistance. So knowing that 200 days acting as support or resistance, in my world of trading, I only use them as scanning purposes, not as strictly just to go short or go long, but they do help you as a real good guide to if you want to be looking for long or shorting the stocks. Okay, and same thing as 50. Okay, 50 is more like you intermediate traders. For instance, if you're a swing trader, you want to be looking at 50 SMA. If the prices are above it, you want to tend to taking your positions to the long side. Okay, if you are above 20, this is for short-term traders, so somebody holding for possibly even a day trade. If they find a stock that is above 20 SMA, they could be just day trading the stock into the upward direction. Again, a lot of factors do involve. You don't just say, okay, if it's 20, above 20, 50, I'm going to keep on taking longs. You obviously need to know the technical analysis. You need to know how the volume works, the candlestick works. You need to know how the trend works, and there's more into it. If it was that easy, everybody would be making money, right? But it's not. So knowing that, now that you have a little bit of background about the SMAs, okay, these are the three main SMAs that I'm going to be using to create a bull scan or a bear scan. Okay, so what we'll be doing in here is bull scan. What we wanna, since we're looking for long opportunities, right? We want price above 200 SMA, right? Does that make sense? Because we are looking for opportunities that are always in the uptrend for the most part, right? We're also going to be adding another parameter in there. Prices are above 50 SMA, right? Makes sense because you're looking for prices in a swing trading kind of environment where you're above 50, you're above 200, okay? And here's the tricky part, price below 20 SMA. Can you choose above? Yes, you can also choose above because it'll give you more like a definite uptrend, right? But the reason why I'm saying below in here is because, okay, your price is above 200, your price is above 50, but what you're looking for is price to pull back to 20, right? Price to pull back to 20 to make that higher low. Once it makes that higher low, then you're going to be looking for obviously support, and where your support is, you know, somewhat of candlestick reversal, the volume, etc., etc. So once you have all that planned out, you can either decide to take the trade, or you can wait for some kind of catalyst, some kind of news, earnings to see if it's going in the upward direction or in the long direction, right? So above 200A, above 50, but you want to wait for the price to pull back to 20, okay? Not below. When I say below 20, it's pulling back below the 50, I mean above the 50, but staying still below the 20, so that if there is a pullback, if there is a reversal trade coming in, it'll be coming in around 20 SMA. Or you can also actually have in here prices around or prices equal to 20 SMA, right? So that's your bull scan. Opposite is same, okay? Price below 200A, because now you're shorting, right? If you're shorting, you're looking for opportunities. For instance, now you're shorting. If you're shorting, let's just say price was here, you're looking for prices below 200A, right? Below 50, okay, and approaching 20, okay? So, or above, or even above 20, because at that point what you're looking for a pullback in a shorting kind of environment, right? Let's just go back in here. So prices below 200A, prices below 50 SMA, price above 20 SMA, right? Little tricky, okay, a little tricky, but you'll understand once we go through the charts. So we're looking for now prices below 200A, below 50, because you're shorting, you're not going long. So if you do take a long trade based on this criteria, you're actually trading counter trend, okay? Because prices are below the big SMA. Big institutions are trading, they're trading to the short side. You're trading against them by going long, so you want to trade with them, so you make a bear daily scan, go short when they're going short, right? But when are you going short? When you're actually pulling above 20 SMA or approaching 20 SMA, and that is when you look for a reversal signal, right? Like I talked about volume, etc., etc. So that's it. And then you can start adding stock price, right? You can add stock price, you can add minimal volume, okay? Earnings, if they're around in next week or so, you can filter that out. You can actually look for candlestick reversal, right? You can look for candlestick reversal. What else? You can look actually market cap, right? Market cap, you can go for small, mid, and large, right? Does that make sense? Or what else? You can look for the relative volume, or you can actually look for indicator, right? Stochastic, right? Stochastic oversold, okay? Over in this one, what you would do is you're looking for long, so you want to look for oversold, right? In this one, you look for oversold because your prices are coming to 20 at the same time you're looking for stochastic to be oversold. So these are just few of the things that you can look for to look for a stock that is about to go to the long side. Remember, okay, remember, this is just a scan. That's it. You might think that, wow, this is, with this scan I can definitely go along in everything. If everything fits in, I'm gonna blindly go along. No, you still have to do analysis. You still have to do you still gotta see how the volume is working, okay? You still have to see how the prices are approaching your support. You still have to see overall market, right? Which is huge, right? Always keep in picture of the Well, let's keep the benchmark, right? Benchmark of the market in mind, right? You want to know what the SPY is doing all the time. So if you don't know what SPY is doing, and if your SPY is, you know, to the downside, you're looking for some long opportunities, just be aware of that, okay? Be aware of that if the SPY is having a down day, or you really want to take that long because it's approaching the 20 SMA, what if it fails, right? Because there are trades that's going to be fail. Otherwise, again, like I said, everybody will be making money, right? So that's not the case every single time. So hopefully this kind of helps as far as building a strong fundamentals. In fact, you can even have in here, you know, dividend date, right? Dividend, does it offer dividend? What else you can see? EPS, right? You can start now. These are what are these? Your fundamental factors, right? Factor, right? So that is your fundamental factor. Okay, so these are your fundamental factors. So you can add EPS, PE, blah blah blah, all that stuff. You can add all that stuff. This is actually also your fundamental factor, but you're scanning. So once you have that, once you combine your scanning for stock based on my criteria, and it could be, my criteria could be technical / fundamental, right? Or you could have simply say my criteria is simply fundamental. You don't have to use any of the other stuff. In fact, most of the stuff is in there. Is for the market cap is a fundamental, right? Your stock price is kind of technical. So you have to decide what is your criteria. Okay, this is where you will have a upper hand over traders that are, you know, out there not necessarily following the right steps, or you belong to a chat room and you're like, how are they searching? How are these people or these traders are searching for these stocks? This is it. This is as simple as it gets. And let me actually show you. I have an image in here. Okay, this is a scan that I created a while back in my Thinkorswim. Bear daily scan stocks. That's it. I want the price to be at least $15. I don't care about the max. I want it to close just like we talked about. These are all below 250 and 20. Doesn't matter, right? Because once you see these, it's to the short side. Then I can scan and scan and scan. I can look for, okay, if, let's just say 100 stocks come up, I can pick only 10, right? That's all I have to do. Then I scan for volume. I want at least 500,000 volume in the daily chart, okay? So you can get really creative. You can add a lot of studies in here, okay? But this is where, you know, professional platform knowledge requires. But what I'm going to show you in a few minutes is the simple free website analysis. Okay, so hopefully you have a strong fundamental side of this whole scan. Sorry about that, I had a phone call. So yes, so even when you're doing technical analysis, there's still a lot of fundamental stuff that you need to do about the technical analysis, and this is exactly what I'm showing you in here. You still need to do some research. You still need to do, you know, some analysis based on the fundamental factors, or having a strong foundation. Because once you have this scan built, right? Once you have this scan built, you can go back in and plug it in your Thinkorswim, TradeStation, whatever platform you're using. That's it. That's all you're doing. Every time you run up your Thinkorswim, this scan is going to run in the background. Okay, whatever you can have multiple screens where you can have multiple scans running. So you can have this scan running. So it's popping up stocks left and right, right? Again, based on your criteria. But once that work is done, that's your foundation has been set. Okay, the foundation has been set, and you grow upon it, and then you, of course, then after that the technical analysis comes in. Then that's how you start adding. Okay, this is the stock that I like. I'm gonna add it into my playlist, into my watch list. I'm gonna keep adding and adding, and I have a limit of maybe 10 stocks that I'm looking at, and that's it. That's what I'm gonna focus on for next week or two. And if it's a day trading, you know, you can do this scan every single day. Again, this is, you can change the criteria. You can change from 200 to 150 to 140, whatever you want to do in that. But this is, I'm just trying to show you that this is how this a scan or similar scan can be created off of this simple website. Okay, so let's add those. Okay, so before I start, I want you to see in here we have total of 7294. Okay, these are the stocks that you see in here listed without even me doing anything, right? So let's do a bull scan. Okay, we want prices, these are all the technicals in here, we want the prices to be above 200-day, right? Simple. Show me the scan so that the prices are above 200 SMA. From 7,000 we're down to 1905. Pretty decent already, right? Let's go back. Prices above 50. Okay, 116.18. Still a lot. Okay, again, you can choose above 20, that's your call, but you know, just so that if you want to do more pullbacks, you can do. In fact, if you want to do price above 20 SMA, you might even see some breakout trades, right? What you're looking for is price pulling back to a decent area, if on the chart, if that implies at that point price is below 20. So from 1600 we're down to 242, right? So now let's just say you are trading a mid cap, okay, or let's just say, what else is there? You can do elite, mega, which would be a large cap, or big stock. Let's just do Russell, okay. Small cap is kind of fall in between 3 million to 2 billion. So let's see how many comes up now. From 242 we're down to 26, right? We're improving. What else can you put? You can pick candlestick, you can pick I do like the volume. Since we are trading a small cap, usually I like about over 500k. I'll do over let's just do 200k daily volume, right? Average volume, which is the daily volume, 6. That's it. So now you have 6 stocks. Okay, you have 6 stocks. Now let's go back. Okay, so let me do this, following along. CDR, okay, since they're daily ones, we're gonna look at the daily charts, right? So in here, looking at a CDR, okay, this is all as is happening, okay, so that you know nothing's been made up, and I'm showing you what I'm getting out of the scan, putting into the live chart. Okay, so 6.93, that's where it's trading at. Okay, CDR, right? Does that make sense? Prices are above 200 SMA. Prices are somewhat above it's pulling back, okay, pulling back to this 50 and 20. But you see how you have an immediate uptrend in here, right? In fact, that's a nice channel. You connect these little dots, that's a nice channel. So what you're doing, this is your support, right? Let it come back down a little bit. That's it. I'm not gonna go into that extent of explaining the trade. Actually, same thing in here, right? DF, Dean Foods, coming down, huge probably earnings, as you can see, right at the support. Let's see if it pulls up to the upside, right? You have a support, long around 1949. In fact, that right now is long, right below 1851 is a stop. What you're shooting, 2050, 21, and even to the upside, as the trend is to the upside. So that's it. That's simple as that. So hopefully, let's just do one more TAST. TAST, Carol's Restaurant. Actually, it's more like a bearish kind of flag up in here. I would stay out of it. You know, this is where you need to decide. Okay, it's a good long right around a 1334 area, but till then it's just forming somewhat of a sideways consolidation kind of pattern, or even a big bear flag, right? Earnings are coming out. There you go. You don't want to play this now, right? You don't want to play this because earnings comes out, stops open at 11, and you're in. You're gonna be cussing me out, but even though I'm not here to take the blame, right? But anyway, so you could take this trade, but when the earnings are there, don't take the trade. That's the way I look at it. Stay out of it. The 1,000, 7,000, like you've seen stocks out there, trade those instead of trading something like that. So that's basically how you scan. Simple, right? Again, you can add more stuff in there. You can add in, you can change it out. Now you can do your prices below 200-day. Right? You can do all those scans in there. So now you have 11 prices below, and what you're searching for now is scans that are prices above, right? You're searching for, where do you go? Right here, right? You're searching for bear daily scan below 20. You want to put that below? That's totally up to your choice. Let's go back, and now you have 302, right? So you're seeing more shorting opportunities than the long opportunities. Let's just say you want to change that. Let's do mid cap, okay? See if anything changes in there with 236. You want to do, let's do price. You want to look for only stocks that are above that are over 30, since we're looking at mid cap. 132. So this is how you can we'll look at a couple of them. Let's see. I'm not gonna take all of them, but let's see. Okay, maybe ALKS. Okay, ALKS. So ALKS obviously below 200, below 50, coming back to 20. So people might be thinking of going long in here, okay? But you want to be looking for opportunities to go short, unless you see somewhat of a pattern, short-term uptrend forming. Again, this is where the skills come in. This is where you don't just say, okay, it's trading right here, I'm gonna take a long and shoot for this gap fill. No, you're gonna still look for shorting opportunities based on your technical analysis education that you have, right? Based on how much you know about technical analysis. You're not gonna just jump in and say, okay, hey, I'm ready to take long in here because I think the stock is going to fill up the gap. It might happen, it might not happen. So whatever you do the whole analysis. The best bet is to always trade in the direction of the trend. The trend was to the upside, broke down right around here, right? Broke this base in here. You should be trading to the downside. In fact, that worked. Okay, it kept creating this lower channel to the downside, and even though people would think that stock is way too cheap here, it could get cheaper. Cheaper could go cheapest. So whatever you do, always do the homework. So hopefully in this little bit of a little longer video, I kind of laid it out where you can use the scan to build up your strong foundation. Then once you have that, you can get into the technical part of it and start scanning for stocks. And you can scan for Forex, you can scan for futures, you can scan for anything. You can scan for mutual funds, in fact, and you can scan in a day trading firm, longer trading firm, time frame, right? It all depends on your criteria. Okay, this is the word here. It's all your criteria. Once you find what your criteria is, that is what suits you the best. Okay, not everybody is out there is making a whole lot of money, or not everybody's style is the same, or not everybody else is sitting on the computer and day trading all day long, or not everybody's even trading stocks, right? So what you want to do, you make the scan, you make whatever right instrument you need to do based on your time availability, part-time, full-time. So hopefully this kind of video kind of makes sense, and I'll put that on the Ticker TV, also on my webpage, on my website, not website, my Facebook page. If you want to follow me, you can follow me right here on the Stock Trend Trader for you, and this is for StockTwits, LinkedIn, it's Twitter. It's basically every social media that's out there. I'm on here. Okay, all right guys, take care, and I'll talk to you later. Bye.